So I hope everyone's had a good day of trade today. And if you were short and got yourself active into long put, etc., at Friday close, congratulations. Okay, today was a major Trump day and major win for your account. So congratulations, okay, for all that you did today. So I know, okay, some of you have questions, and this is an open house, so we'll answer those questions, okay, as we get by. But today basically, okay, we've called in here to speak, okay, about the market structure, the market voice, and what the market is expected, okay, to do, okay, going forward, right? So a quick recap: we were in a balance on Thursday. The world as we know it has completely, okay, changed since then. And I don't say it in terms of the markets or the charts, okay, we are look at. There is a shift across the globe, and those two big words which are new to you, should not be new to you, is actually, okay, those two words: Trump tariffs, right? So they have changed the global landscape, so to speak. And I was there in that webinar also we did on Thursday, and I did mention to you that what was happening was not a 1 hour 1 day kind of a thing. It is a multi-year, multi-month kind of a scenario, and it's got implications for business going forward. And whenever, okay, we speak about implications for business, we speak about the implications on the companies we track. And those companies, okay, we track get represented in the indices of those countries, okay, especially, okay, for us, the Nifty, for other global markets, the global words, etc. That is the situation out over there. They will respond, okay, to those. But make no mistake in identifying the situation for what it is. We are living in a tumultuous time right now, and what's going to happen is got implications going forward. And how we respond, okay, to this, it's not as simple as taking a put or taking a call or reacting to the market. There are major factors at play. The markets are not just for intraday traders or traders who trade on derivative cycle. What we are witness to is something, like I've said before, and I'm saying it again, what we are witness to is something which is a multi-month, multi-year kind of an event, right? So don't expect anything, okay, to happen in about 1 or 2 days, until and unless, okay, everything reverses back to what it was prior to April 1, April 2. And then, okay, we can say that the market and the world has gone back to where it was, right? So our way of looking at everything is to understand it through the structure of the market, to understand where price is positioned relative to the value it had established recently, right? So we call it in terms of understanding value area, where the market is priced right in value, where the market is overvalued, where the market is undervalued, and price responds, okay, to that definition of value. And the best understanding of that value is always in the higher time frame, the yearly time frame. You've got to see and understand what the market is doing relative to where it established value last year, that is all of 2024, right? And then, okay, what you do is we call this a top-down approach. You look at it in terms of where the value is today relative to what happened last month. And then, okay, you look at it in terms of the weekly. You look at it in terms of where the value is today relative to what happened last week. And then, okay, you can go and break it down further and say, okay, I want to look at value today relative to what happened yesterday. So I'll just start off, okay, with, again, okay, this chart was posted on our YouTube channel, and we had a discussion on this at the end of the series of March. Always at the end of the month, make it a point to look at yearly profiles, and this need not have any kind of introduction, or need not require any introduction. What we're looking for and understanding is where the market is relative to what it was doing through the year 2024, through all of last year, right? So we spoke about this level, this VPOC of 2024, which was around that 24,100, 24,150 zone, and we had come down to about 23,900 in the spot, and we were testing it. And we were in that webinar that day when the markets were closing the end of March, the series of March, the market probed up to this POC, the volume point of control of the entire year. But we said that it was not going to be bullish till we transacted volume above it. That has not happened. The market has gone and come back lower. And I did make it a point of mentioning to you that this zone is the one which is going to be the focal point for 2025. Today we have made 2025 lows, right? Lows of this quarter, the entire 4 months, and lows of this year have formed here. This is the most recent profile, and we are trading below the year lows which we have established through the year, the calendar year 2025. So this is the scenario. Right now it is up to buyers to come back and push it back into the market. Right now, what has happened today since the open, the market has not shown extensive supply. So I'm just going to quickly switch to an order flow chart, and we'll come back to the current moment, because the most defining moment about what can happen is not what has happened in the past. It's about what is happening right now. And if you want to understand what the market will do next, you just got to look at where the current demand and supply of the market is. So that's why the order flow chart comes on screen. And this is what we're going to be talking about, what really happened today on the gap down. So gap down came. I spoke to you about Friday not showing a lot of supply, and the reason for that was this. There was a little bit of green in the market. Let's address that Friday situation. So this happened on Friday near the close. There wasn't a lot of supply coming at the lows to really account for a large gap down. Now this was happening around 3:15, 3:30. The news which shook the world was what came in 1 hour later on Friday, around 4:30, when China announced that retaliatory move. Now this was not priced in by the market at all. In fact, all these greens which you can see, they are signs of shorts being booked by markets. Not all the shorts. Remember, I've been speaking to you about the kind of shorts which have come in, and there is a very large short which was built at the end of March. So let's first come to that, what actually had happened through the series rollover, which was around that 27th, 28th June. So this is that short which was built up right here, right around this zone of rollover as it was happening. This was the short which was building up, right? And you can see it over here in the pot over here. This was the short which had come in around 23,800. Now some of that short is booking now. We've seen evidence of that book on Friday, and some of it has been booking today as well. So that is good news from a bullish point of view, because though there was initiative supply at the top, you can say that there are no IS candles at the lows, so there is no sign of supply adding at the lows. Right now, what we need to understand is when we are looking at this demand and supply. Let me switch back to the order flow chart, because I want all of us to be very, very clear about what we speak when we use these words demand and supply interchangeably. Now, everything in the market is governed by volume, right? And what is volume? Volume is basically broken up into people who bought, that is demand, people who bought that market. They created demand, they bought into the market, and that's why you can say some green volume came, or you can say COT or 10 bar COT was green that day. The other half of that volume is what we call the supply side volume, which is basically people who have sold or initiated supply or have added to the supply side of the market, and that's why you can say the COT is red, or the supply is more dominant than demand at that point in time. Now, what really happens? This is a very, very simple equation. Whenever demand is higher than supply, it's a very, very simple and the basic framework to the way markets work. When demand is higher than supply, that means buy side volume, greens, demand is higher than supply. You can say price has an incentive to go up. When supply is greater than demand, you can say, price wants to go down. So you look at this in a 30-minute time frame, which is the most ideal time frame to track it. right? So today, okay, as we went lower, there is some supply again come back into the market, 4,069. So it may be a little bit challenging for the market, okay, to make fresh lows again at the open tomorrow, fresh highs again at the open tomorrow, right? So some supply is okay rebuilt okay back into the market in the trade of today, but majorly in that gap down, what we have not seen is initiative sellers. So after such a big price dump, you would have expected some supply to come in, but that supply okay was missing for the most part of the day. That supply okay which we saw at 23,980, which brought the market down 2,000 points in about 6 days, 7 days, that kind of supply is missing. So that is okay what is positive okay from a session like today. Did buyers come? No. Okay, you have not seen IB30s form to suggest okay that the market wants to go upwards, right? Now, when you're looking at demand and supply, I want all of us to understand okay some basic truths about over here. So when demand is there, or when green is there, or when 10 bar cot is there in green color, you can say demand is there. But some of that demand okay is responsive demand, and some of that demand is initiative demand, right? We're looking for people who are initiative in market. Now, what are these initiative players? These initiative players are generally new business, new trades coming into the market, people with no previous position. They buy into the market and they buy at market prices. They initiate orders, or they go market okay to buy the orders, and that's the kind of trade activity which we track and which we know is a market mover. Right now, this 10 bar cot is a mix of both response and initiative. So hence I always speak to you, when I speak to you, I tell you keep tracking initiative buyers, right? Remember when we spoke on Thursday also, when that session okay was going on, settlement day, the market was quiet that day, and we were in a 40-point range for about 4 hours because the market did not have initiative players, right? Contrast that okay to what was happening at the end of March series, when all those initiative sellers came in at 24,000. We have dropped okay 2,000 points. So whenever initiative traders come in, whenever initiative buyers or initiative sellers come in, you can say the market is got active demand or initiative demand, and initiative traders or initiative buyers and initiative sellers are the ones okay who are moving the markets, right? Quickly summarize okay what I'm planning to tell you is that if you have a 30-minute chart open, the market okay, you expect the market to go up, you would want to see IB30 candles in the market. So till you see initiative buyers in the candle, the market okay is not long, and you can say that previous trend which was dominated by sellers is still very much active in the market. Did I see anything initiative today? Absolutely nothing. There is no initiative buying okay in this market today, right? The good news is, if you're looking at this market okay as something okay which is a demand or a support zone, the good news is there is no supply in the market today. There isn't a lot of initiative selling which has come on the gap down. In fact, okay, we did not even see it at the open. Generally speaking, when a market opens gap down, you expect to see some supply again come in after those initial people have booked in, etc. But right at the open today, we did not see any IS candles for the first 3 minutes. In fact, the market quickly went up by about 200 points right at the open. So that is okay, something which you need to watch. So this is how we opened in the morning today. Right here, there is no initiative supply at the open, right? All this okay was some people okay covering shorts, etc. And the market okay shot up to about 22,240 immediately about 9:50, 9:30, and we had about 22,280 print by about 9:33 a.m. because okay there was no supply to push a market down. So one of the first things okay we talk about okay when a market gaps, when it gaps down, you got to look for presence of IS, initiative sellers, to push price further down. Did we see IS today? No. And when IS does not come on a gap down, it gives a chance for the market okay to go up, right? Subsequently, okay, we did go down later in the day. There was some okay sell side activity okay which came in, and the market got down. We came back, but we were hovering okay around the VWAP and the Depop till that little print okay at the close. So one IB had come in here around 10:27, initiative buyer, and then we went up to the highs again to about 22,174. We got an initiative seller. We went back okay to the lows, and that's okay how okay the entire day played out. panned out. Okay, it was roughly okay up and down. So there were these two IS sellers at 1139, 1142, 22.0, 22.126, 22.096, and because of them, we made a lower low in that G period. It was, and then okay, the market okay found some greens over here, right up to about 21,860, and we've gone back up. And from a market profile perspective, you can say you can say that today has been a neutral day. So is a neutral day from even a market profile perspective a symbol of change? No. Okay, so it just tells you okay that the market is on a hold mode. It's still waiting and it's not decided completely as to what it is gonna do next, right? So from a market profile perspective, the neutral day. From an order flow perspective, no presence of initiative buyers and initiative sellers. So that means this is still okay slated to go a little bit more sideways, mostly into tomorrow, and then okay we'll see okay where it was. What you'll be looking for the market, okay, if you want it to go up, is the presence of IBs, initiative buyers, right? Now, if the IBs come in and they replace what was done on the 26th and the 27th of March when those IS candles came, then okay, you can say that there is a shift in bias and the market okay has gone from the active role of initiative sellers to the active role of initiative buyers. And now you can say okay that there are some big buyers who are defending the lower prices and demand has come back into the market again, right? So this is okay how it is. The market's policy that is on Wednesday. We have settlement, okay, and most of these weekly offs okay tend to come in the middle of big global events, so that's not going to help. Next week also is full of a lot of holidays, but the difference between this week and next week is at least okay towards the end of next week most of the globe is also going to be off. But what's going to cut us is the holiday on Thursday, and I think okay there is another holiday on Monday as well, and we will be shut okay when the globe is working. So that is going to affect a lot of the buy side and the sell side imbalances, okay, which begin to form. It disturbs the rhythm of the market, especially okay as it wants to tune to the global side of things, right? So my point over here is what I'm looking at is irrespective of what is being spoken about outside, irrespective of the noise okay which is coming in outside, irrespective of the news which is coming in from outside, you have only one chart to look at. Okay, the chart of the trade you're going to take, the instrument you're going to be trading in. You don't want to look at the GIFT Nifty. You don't want to look at what the Dow is doing. You don't want to look at what Tokyo is doing. You don't even want to look at what Europe is doing. Now, when I was doing my training in order flow, I was told very, very bluntly, I was told the smartest traders are already in the market you are trading in. And they know everything about what is going to happen in the US. They know everything about what is happening in Japan. They already know everything about what is happening in Europe, and they've taken positions knowing what is happening out over there. So you don't need to go and think about what is happening in Japan or what is happening in Europe or what is happening in US. Those people, there are traders, there are institutions, okay, who have thought about all those possibilities, who have thought about all those scenarios, and they have built trades. And those trades are going to reflect all in the chart which is there in front of you. And that chart has to speak to you. That chart okay has to okay tell you what is happening. And if that chart okay works with you, be it a market profile chart or an order flow chart, a PNF chart, a Renko chart, or whatever chart, a candlestick chart, if that chart tells you what you should do next, then okay, you're in the right place, you're in the right system to go out and do okay what you should be doing, the kind of trades which you should be doing. For us, okay, what works for us is tracking demand and supply, and tracking initiative buyers and initiative sellers. And as long as you keep it simple, okay, you see an IV3, you want to go long, you see an IS3, you want to go short. as long as you have a process to identify what to do when those kind of systems or patterns or signals appear, you will have it done very easily for you, right? So I hope this is helpful. Keep a track of what is happening around you. There's going to be a lot of situations developing, and you've got to be alive to a little bit more volatility in the markets. You've got to be alive to what not just the futures market is doing, what the options market is doing, because we've been seeing a lot of money come in, a lot of inputs coming in via the monthly options also, right? So I am basically seeing a lot more activity in the monthly puts compared to what has been happening previously. And we are keeping a special attention at the last half an hour, 45 minutes, because that's where the big money seems to be coming in, especially around the end of the month. So a case in point was 22,500 PE monthly. So again, this one, has been getting a lot more of these initiative buyers coming in. So a lot of traders are not using that front end weekly contract. They are building positions via the monthly contract. So this was what was happening early on Friday in this particular put. Again, this we saw on Thursday, but these IB30s came in this 22,500 PE on Friday. It came in over here, and this did not happen at the close today, but sometime in the afternoon also they were initiating positions via the monthly put. So again, this is a little bit different from the way we have tracked this previously. 656, 766, it went to 855 and it closed down. So no, fortunately, no IB30s. Fortunately, from the demand point of view, no IB30s in the monthly puts for us to tell that there is an immediate downside after today's gap down. Is it good for upside? Not yet. You'll have to see initiative buyers come into the market, and only when initiative buyers come into the market, that's the time you can say that the down move is over and demand is gonna be bigger than supply, right? So this entire move has started with IS30 signals. It will end when you get IB30 signals in the tape, in the market, right? Now, I know there are some questions coming in. One question which I commonly get is, should we focus on the 10 bar call, or should we focus on the initiative buyers and the initiative sellers, right? So I've answered this many times before. The hero of your chart is always IB and IS signals, especially in the 30-minute time frame, because that is not intraday. That is a trader who wants to hold his positions for beyond the intraday time frame, right? So keep a 30-minute chart open, look for IBs and IS30 signals out over here. This is the major hero. Why are these important? Because these are market orders. This is buy to open orders, right? So remember, somebody covers an existing position, right? The cot can go green. The cot, which you see as red or green, is actually a sum of cover orders and cover orders of previous business and new business, right? So we see this all the time, right? There are essentially 4 kinds of orders a trader can put into the market. One is what we call a buy to open order. Second is a buy to close, which is a previous sell position. He buys back, he closes that position. Third one is a sell to open, which is a new initiative selling, which is making it to the market. And finally is an STC, or a sell to close, which was a buy position, which was there in the market, and he's covering that position. So he's selling, and that's how that becomes there. So there is buy to open, there's buy to close, sell to open, sell to close. Now, every time somebody opens buy to open, it's a demand, yes. But somebody covers a short position, that gets reflected in the 10 bar cot also. right? So the truest barometer of change is always going to be somebody who's initiating business. The purest demand and supply is your IB and IS. What you want to see is the 10 bar caught being heavily green. That means lots of supporting demand and IB signals. That is your 95-97% probability trade which you are looking for. So there is initiative demand on existing demand, which is both responsive as well as initiative. And when you get those kind of signals, those are one of your stronger signals. We got those kind of signals at 24,000 around the 27th of March, which is what I was alerting you to, that the market is shifting. It was going up on red caught around the end of the month, and IS30 signals come. So whenever these kind of patterns show up, those are my high conviction signals, right? It was going down on Friday, but caught was green. What was it? Why was caught green? Because some of that supply from 26, 27 was closing. If we would have got IS30s on Friday on that red caught, it would have been different story. It would have been a different position. Eventually, we got gap down. And you can say that the market got in, but you know what? I was responding to somebody. Sometimes the market gives us easy trades, right? The key over here is to understand when to take all trades and be good at taking all trades up, down, sideways. Then be dependent on the market giving us a free dinner or a free lunch, right? Those free lunches, those free dinners come once in a while, and if you made money, excellent, right? But you have to make money out of your skill set, not on something which is a free lunch or a free dinner given by markets. I hope you all can see the distinction. Once you get good at trading and you go down this path even more, you will perfectly understand what I'm trying to tell you. But the whole idea over here is to be better at the business of trading and to understand the information the market is giving you and trading based on that information. Right. So I think I've spoken enough about demand and supply. I'll just quickly pause here for any questions. If you have. So the question is, there were no IS or IB bars on monthly puts and it gapped down. So yesterday's gap down. This is actually a good question. So this gap down of today, happened, like I said, because of that event or Friday where China retaliated till about 4 o'clock, 3:30 p.m. our time. The entire globe was stable. 1 hour later, when China announced that they were going to retaliate, that is the time the gap down happened. So we call these events exogenous events. In fact, I mentioned this word in my Twitter feed also this morning. Exogenous events are events which are not fully realized by market participants. That means, in short, the market was caught by surprise. They were not prepared for what was coming. Now, these kind of things do not happen because there's somebody in the market who always knows something about what is going to happen. Very, very rarely the market as a whole is caught by surprise. But we are living in those times where these kind of events are possible. It could have gone completely the opposite side also. It could have gone completely the opposite side also. Friday after the close, Trump could have withdrawn and we would have seen a 500-point gap up also, right? So these are news specific events. Not every single thing is accounted for in markets. That is why we call it a business of risk. Your best of positions, because of one event or one piece of news, can go wrong. Your best of setups, you may be in a big profit of about 2 lakhs, 3 lakh rupees on your position. You've not booked. One piece of news may come in and suddenly you'll go from plus 3 lakh profit to minus 3 lakhs. It's happened to me. I know that it's happened with a number of traders also. That is why we call markets supreme. They are above and everything else, and anything which can happen is possible, can happen in the markets also. Right. So again, news-based things are something which are not in the realm of everything which is expected by the market. And sometimes the market is also caught. The major players of the market are also caught by surprise. Did anybody know that China was going to cut rates, was going to put that tariff on the US on Friday at 4:30 p.m.? I doubt it, right? If somebody would have known, okay, they would have taken positions, okay, and built, okay, everything. But everybody was caught by surprise, which is why, okay, we saw the kind of reaction the globe gave us that day, right? So prepare, okay, for exogenous events. There could be a lot more, okay, turmoil in the week ahead. We are still heavily news driven, but the key to understanding all of that is to keep it very simple, okay, with an order flow chart open in front of you. As long as you're not doing any kind of guesswork, right? And that's very, very important. As long as you're not doing any kind of guesswork, as long as you're not random in the way you are gonna carry, in the way, okay, you're gonna be trading positions, you should be fine. If there is a process backing what you're doing, and you know, okay, what you're doing is with a perfect backing and a perfect result which has worked for you in the past, you should be happy, okay, to trade the way you are. That is what we call a process driven. Don't be just doing any kind of guesswork or buying puts randomly because 1,000 other people are buying puts, etc., etc. The market is full of smart money traders who've been there before, who've seen everything before, and when you are initiating, they may be the ones, okay, who are booking places also. Right. The question is, how long, okay, do you carry IB and IS signals? So depending on the time frame of your choice, okay, we call it the rule of 10 bars. So 10 bars, okay, you carry those positions and you look for, okay, for subsequent confirmation after those 10 bars. So if there was an IS bar which came in and for 10 bars, okay, everything was red and there was no booking, I have no problem in carrying my position forward also. It's just a little bit of an art involved over here, no? It's a science. But you've got to put your pulse into it and understand what is going on and use a little bit of CS, common sense, and know, okay, when to take profits, or when to hold, when the tide is turning, and when you got to hold your position and keep it going for some period of time also, right? So that's it for me, guys. I think, okay, I've spoken enough about the demand and supply and why it is critical for us in the times, okay, we are in. I hope, okay, you found this useful. There's going to be a recording of this on the YouTube channel as well. Feel free, okay, to follow or ask questions on the Twitter feed. We are around over here, and I just want to wish all of you the very best. We are still, okay, in that new financial year 26, guys, okay, and I really, okay, wish that all of you, okay, work a lot more with data, cut out, okay, randomness, okay, from your trading, okay, work, okay, with the system, work with the process. You know, as long as you stay away, okay, from doing guessy trades or trading randomly or trading on that impulse or that whim, you know, just cut it out and adopt a scientific process. You should have a good financial year for yourself. Right? We've created, okay, tools for you. You have everything, okay, at your disposal. The best data is still coming to you. This is a global standard in understanding markets, and it's at your fingertips. Now, what you do with it is completely up to you. But you can work with it, you can utilize it, and you can be a better trader than what you were in the last financial year. Right? Remember, okay, if you are expecting a different set of results this financial year, you'll have to, okay, give yourself a different way of looking at markets. If you keep doing the same things again and again, you will get the same set of results. For you, okay, to find a different experience, a different set of results, you will have to do something differently, right? So you'll have to change, okay, something, okay, inside of you to get a result different outside of you, right? So I'll leave it over there. I wish you all the very best, guys, and thank you for joining in. And we'll continue the conversation. If there's anything else developing, we'll continue the conversation on our Twitter feed. Thank you all for joining in.